Hi, this is Dave Ford, President and Founder of the Atlantic Gold and Silver Centre. Today is Tuesday the 16th of May 2017, and today we're going to have a quick look at some of the recent volatility in silver prices. Now, we've seen the cost of silver drop sharply over the last 2 or 3 weeks, and such large moves inevitably force a lot of paper traders to dump their holdings and sell out, and that's what the manipulators are relying on, that people who are levered up on the market are forced to sell out and lose their positions. But this can never once force people who have got fully paid up physical silver in their possession to sell. Now, I was actually scheduled to record this video last week, and someone asked me later in the week why I hadn't recorded a video. The reason was because we've been so busy. The cost per ounce has come right down on silver, and it's been a great opportunity for a lot of our regular customers who just buy these opportunities and buy long term and are just accumulating for the longer term. We've seen a lot of people in the last few weeks just buying up everything that we have in stock. So let's go straight to the chart and see how this recent price drop appears in the grand scheme of things. Okay, here we are at our website, and we're going to go straight over to the live charts. I'm going to maximize the screen so that I get more room to work with. I'm going to hit that again a couple of times so that I get 3 screens to work with. Okay, on our first chart here we have silver. I'm just going to put in my moving averages. And the exponential ones. And update this chart. Okay, let's see, there we go. So this is the recent drop in price we've seen over the last few weeks, and we've seen it bounce off around about the 1620, 1625 mark, and it's starting to come back up again. Now let's look at this in the longer term. Let's go back 2 years, and we're going to draw a trend line from the lows that were back in December 2015. Then we had this strong rally in early 2016, a pullback later in the year, and then starting the start of this year we've had a strong rally again. So if we draw that through those, lo and behold, look at where our pullback has come down to. Now this switches to weekly bars when we go on a longer time scale, so that's why you've seen those 3 bars there. That's not 3 days, that's 3 weeks. So we have seen a long-term uptrend that's been hit and bounced off of here recently. So if we just zoom in to the 1 year mark, we can see what's happened. The prices did actually go through the downtrend and they've come back up through it again. Now a trend line is not a hard and fast like a wall, it's more like a wire fence, I suppose. If you get a herd of cattle run into a wire fence, you know, if there's enough of them, they can bend the wire fence a little bit and it will give a little bit. You've got a crowd rushing in one direction, there can be enough momentum to make that fence bend, but it doesn't necessarily mean it's broken. Let's have a look at gold over the same period. I'm not going to bother putting the moving averages on here. Okay, so for gold, if we go and draw the uptrend line from the same point back in late 2015 through the low there, we see that gold is not anywhere near its downtrend line, sorry, its uptrend support line. In fact, it's quite some way off, and it's operating on a different trend that looks like it's coming up here. Okay, now it doesn't mean that it's going to stay there. That's a chance that gold might break through this and come back down to this long-term uptrend line. So there is potential for some weakness in the gold price. It may hold here, it may not. I haven't really decided myself whether I think it's going to or not. If it does come down, it may only come down to the 1200 mark, which seems to be quite a key resistance point for gold. So let's have a look at the gold-silver ratio. Okay, we see a very sharp rise in the gold-silver ratio. This is because silver did go down sharply and gold didn't really participate in the drop. As we've just seen on the charts, we've seen a sharp rise in the gold-silver ratio up to this 76 area, which is where it was, back about a year ago. If we go out 2 years, we can see that the absolute highs were around about the mid-80s in the gold-silver ratio, but it didn't stay there very long. If we do see gold weaken and drag silver lower, then we might see a return to a really high gold-silver ratio in the 80s, but I wouldn't expect it to stay there very long. If we see that, we'll see a heavy buying and we'll see the price snap straight back up above that trend line. So we've seen that we're in classic buy the dip territory. The gold-silver ratio has gone up very high, although not quite at the absolute highs yet. Weak paper traders have all been forced out of their accounts, meaning that only long-term holders are still in. What's next? Well, barring immediate financial collapse or a war, we're not going to see silver rush straight back up to $20. There's an old saying that says if somebody trips off a curb, they'll likely brush themselves off and go straight back up. If they fall down a flight of stairs, however, they're not going to be running back to the top anytime soon. It takes a while for things to heal. Same is true of prices in the stock market. If you see a small decline, it can easily come back up. If you see a big crash, like we've seen in the last few weeks, then it will take time for those prices to go back up. So don't expect silver just to come running straight back up to $20. So it will be a slow recovery, but it means there'll be plenty of opportunities to buy. Now, looking at the gold chart though, that's the one that worries me a little bit. Gold has not had such a big sell-off as silver, so there may be further weaknesses ahead for gold. And if gold drifts down into the summer months a little bit, it may actually drag silver a little lower again. You might see silver coming back down to that trend line, possibly even break through it. If that happens and the gold-silver ratio goes to 80 or even above, that will be a great buying opportunity. If silver's below its trend line, gold-silver ratio is high, we would expect silver prices then to start accelerating up very quickly. Off of that, there'll be a real bounce. So for all of you who are wisely accumulating precious metals for the long term, it looks like the summer months will once again be a good opportunity. However, seasonally, prices do start rising pretty rapidly into late July and early August. So as we've said before, just like at Christmas last year, I said don't wait for prices to start rising before you jump on board. If you're looking to accumulate silver and gold, the quiet summer months are once again looking like an excellent time to do it. So don't leave it too late. Thanks very much, and we'll see you all again in a few weeks.